Ladies and gentlemen, thank you for standing by, and welcome to the Yum China 2020 second quarter earnings conference call. At this time, all participants are in a listen-only mode. Following the presentation, there will be a question and answer session. To ask a question today, you will just need to press star one on your telephone. But I will now hand the conference over to your first speaker today. Thank you, and please go ahead, Debbie.
Thank you, operator. Hello, everyone, and thank you for joining Yum China's second quarter 2020 earnings conference call. Joining us on today's call are our CEO, Ms. Joey Wat, and our CFO, Mr. Andy Yeung. Before we get started, I'd like to remind you that our earnings call and investor presentation contains forward-looking statements, which are subject to future events and uncertainties. Our results may differ materially from these forward-looking statements. All forward-looking statements should be considered in conjunction with the cautionary statement in our earnings release and the risk factors included in our filings with the SEC. This call also includes certain non-GAAP financial measures. You should carefully consider the comparable GAAP measures. Reconciliation of the non-GAAP and GAAP measure is included in our earnings release. Today's call includes three sections. First, Joey will provide an update regarding recent developments. Then she will offer some highlights around the quarterly results. Andy will then cover the financial results and provide an update on our full-year outlook. Finally, we will open the call to questions. You can find the webcast of this call and a PowerPoint presentation which contains operational and financial information for the quarter on our IR website. Now I would like to turn the call over to Ms. Joey Wat, CEO of Yum China. Joey?
Thank you, Debbie. Hello, everyone, and thank you for joining us today. I will first update you on COVID developments, and then we'll move on to cover performance in more detail. Throughout the COVID pandemic, we have been committed to safely providing good food, great value, and convenience for our customers, wherever they are. Safety is the key word here. At our stores, temperature checks, face masks, and frequent disinfection and cleaning protocols remain in place. A safe and healthy environment creates confidence for customers and employees, which helps drive recovery in our business. We approach this challenge with an open mind, with flexibility, speed, and the courage to try new things. Our nimble marketing, enabled by our digital infrastructure, helped drive improvements at both of our core brands compared to the first quarter. KFC launched Buy One, Get One weekends in June for the first time for our members. Pizza Hut drove traffic with its first ever all-you-can-eat promotion, featuring steak and baked crayfish. We focused our resources on engaging with our members, targeting specific offers and promotions. Our privilege programs drive frequency, spend, and cross-sales. However, we are still experiencing significant headwinds. The recovery path is non-linear and uneven. April and May sales improved sequentially, while June was impacted by delayed school holidays and more stringent social distancing due to resurging regional infections. Our transportation and tourist locations continue to experience significant year-on-year volume declines, which impacts KFC more than Pizza Hut. Around 60 of our stores in Wuhan and northern China remain closed for the time being. Even with short-term uncertainty, we are enthusiastic about our long-term prospects. In an incredibly challenging environment, we celebrate three important achievements. First, we opened our 10,000th store in July. This is truly an incredible achievement that would not have been possible without our exceptional employees. We are seizing this opportunity to expand our footprint. Second, Pizza Hut has now been serving our Chinese consumers for 30 years. Beginning in June, we kicked off our 30th anniversary celebrations with an all-new menu and all-you-can-eat promotion. We saw long queues and new customers. We are now a proud food service sponsor of the 2022 Olympic and Paralympic Winter Games in Beijing. We are honored to work with the Olympic Committee to promote Olympic values of excellence, respect, and friendship here in China to our millions of members and customers. These achievements show how Yum China has become deeply ingrained in the lives and memories of millions of Chinese people. From the first taste of KFC in 1987 in Beijing to trying something new at Pizza Hut, we are proud to be the largest and still growing restaurant company in China. With the combined effort of our team, we continue our sales recovery and importantly, remained profitable in this quarter. This profitability is a reflection of our resilience, our adaptability, and the strong, dedicated execution of our team. As we enter the third quarter, I look forward to continuing our innovation journey. We are cautiously optimistic. The recent regional outbreaks highlight that the recovery is non-linear and uneven. While the summer season will be challenging, I'm grateful to be leading a dedicated team, ensure that we are building a strong and stronger Yum China. So let's talk about digital strategy. Benefits of our digital strategy were particularly evident over the past few months. I would like to take some time to talk about how our member program and digital ecosystem have built our resilience, both for the short and long term. Our over 265 million members provide a strong base for engagement. We interact with members within a digital ecosystem supported by our super app, strategic partnerships with online platform and in-store digitization. Whether letting our customers know about our contactless delivery model or promoting weekend-specific offers, we reach our members faster, with greater flexibility and at lower cost. Member sales account for over 60% in the second quarter. While overall sales declined during the outbreak, our year-on-year member sales grew by double digits. We acquire new members in innovative ways. Using popular social media apps and websites, we convert online traffic into in-store sales. We also engage at the corporate level. Over 10,000 corporations have signed up to our corporate delivery program, bringing entirely new groups of customers to Yum China. Once members are acquired, we are able to design more targeted promotions. We improve the stickiness of our members as they use our super app or mini programs, eventually upselling members into our privilege program. We have sold close to 10 million privilege subscriptions this year. Frequency and spending of these loyal users is more than double pre-subscription levels. Overall, we doubled the average revenue per active member over the past few years. Our members are increasingly loyal to our brands. Engagement is crucial for our member retention. Over years of consumer insight, we have developed award-winning games, marathon clubs, and even one of the largest online children's bookstore on our KFC app. Whether through short-term promotions or long-term member engagement, our digital strategy extends across brands and channels, from dine-in, delivery to takeaway. With this solid digital foundation, we are well positioned to capture future growth opportunities. Off-premise dining remains a key pillar of growth. Delivery sales accounted for 29% of sales in the quarter, a 36% year-on-year growth. Our delivery business is top of mind with our consumers. It's consistently rated highly in taste, convenience, and value. Our dedicated delivery riders once more support growth during this time. At Pizza Hut, digital engagement drove incremental takeaway growth. We've redesigned the menu and packaging suitable for takeaway. We use our digital channels to communicate the value and convenience of our one-person set meals. Over half of all takeaway orders were done through mobile. I'm proud of our achievements thus far, but there's much more we are targeting. From ready-to-cook, corporate, and late-night deliveries, we have the scale, the resources, and the vision to capture those future opportunities. Now let's move on to menu innovation and value promotion. Our digital initiatives rely on an enticing, innovative menu to get customers excited. Pizza Hut launched its new Platinum menu in conjunction with its 30th anniversary celebration kickoff. Learning from successful limited time offers, this menu is substantially fresher, extending our appeal to young and family-oriented customers. We showcase our pizza innovation with our Pizza AS series, 薄脆饼底系列, thin crust pizzas that appeal to smaller appetites. We extend our leadership in the steak category with thicker Angus steak, and importantly, make steak available for delivery. Our Monet afternoon tea set, with virtual reality effects of Monet paintings in select stores, that appealed to our young social media savvy customers. Many menu items also got an upgrade. Our baked crayfish with cheese got high marks on value, and our lasagna was appreciated by young and old alike. I'm really excited about all the innovation in our 30th anniversary menu. The look and feel show our Pizza Hut positioning, which is always something new. So I hope you will try it soon. KFC brought back favorites beef wrap and taco junior during the quarter, with crayfish in the taco to showcase abundance and premium. We extended drink, dessert, and late-night delivery lines. Our breakfast tofu pudding, which is 经典风味豆花, quickly became a crowd favorite, and we showcased festival innovations with exciting products such as scallop salty egg yolk rice dumpling. In Chinese, that's 干贝咸蛋环八宝粽子. To drive traffic, KFC also launched value campaigns throughout the quarter. Our plant-based protein pilot was successful. Introduced across KFC, Pizza Hut, and Taco Bell, they sold out quickly. Once the domestic production may be scaled, this has great potential to bring our brands to new and discerning consumers. Now, let me wrap up with a few brand-specific observations. First, KFC. KFC continued to demonstrate its resilience and operational excellence. Second quarter transactions substantially improved compared to the first quarter. Compared to the rest of our portfolio, KFC has a higher concentration of stores located in transportation and tourist hubs, and they are impacted by the downturn in business and holiday travel. Delayed and short-term school holidays, together with lingering effects of the outbreak on consumer behavior, will continue to pressure sales. We will work on providing value and occasion to draw customers in, but recovery is likely to take an extended period of time. Next, Pizza Hut. Our 30th anniversary all-you-can-eat campaign went viral, with over 80 million views and comments on social media, driving long queues at our stores. We have seen encouraging signs of transaction recovery. However, the delayed and short-term summer holidays will impact our business as well. We will strengthen our offerings for individuals and for delivery and takeaway while family dining volumes recover. Third, Taco Bell has now expanded beyond Shanghai. We opened our first flagship store in Shenzhen and will be opening soon in Beijing. We are excited to bring this new cuisine to more of China, and we are working hard to create an appropriate business model just right for Chinese customers. Finally, integration of our Chinese dining unit is on track. Our Little Sheep and Huanjihuan store sales are recovering, and we are leveraging the YUMC network in areas of delivery, retail, and logistics to further Huanjihuan's capabilities. With that, I will hand over the call to our CFO, Andy Yeung. Andy, please.
Thank you, Joey, and hello, everyone. I will first address financials and developments in the second quarter, then provide some color on our outlook. Unless noted otherwise, figures mentioned refer to the second quarter of 2020. All percentage changes are before the effects of foreign exchange. Now, let me start with the second quarter results. With over 99% of store open, total Q2 revenues recovered to 93% of the prior years. In the first quarter, revenues were 79% of the prior year level. Both of our core brands have quarter-over-quarter improvement in transaction volume. However, traffic is still below pre-COVID levels. KFC's same-store sales recovered to 90% of prior year, compared to 89% in the first quarter. We saw sequential increases in average unit volumes in April and May, but a weaker June, while weaker weekday and dine-in recovery benefited from our promotional campaign, regional differences persist. Our transportation and tourist hub sales, which accounted for high single-digit sales mix, were still significantly and negatively impacted. The high mix of younger school-age customers meant that the delay and shortened school holidays had a bigger impact on KFC than Pizza Hut. Lingering effects of the outbreak on consumer behavior remain a headwind. Pizza Hut same-store sales recovered to 88% of prior years. This is a significant improvement from the first fiscal quarter, when sales were 69% of prior year. Relative to KFC, Pizza Hut has a significantly lower exposure to transportation hub locations. Our store in lower tier cities continue to perform better than stores in the higher tier cities, partly driven by a higher concentration of transportation hubs and tourist locations in higher tier cities. Our strong brand equity also helped relative performance in the lower tier cities. The sales recovery is non-linear and uneven. As Joey mentioned, growth momentum was slowed by the resurgence of regional infections, delay and shortened summer holidays, and continued anemic sales at major transportation and tourist locations. We opened 169 stores, mostly at KFC. Construction activities have mostly normalized, and the pace of the new builds is on track. Restaurant margins were 13.7% compared to 14.7% last year, mainly due to sales leveraging, which was partially offset by our efforts to control costs and one-off benefits. Cost of sales was 32.9%, a 1.4% year-over-year increase. While protein supply eased in the second quarter, our contracts are generally signed 3 to 6 months in advance. Commodity inflation for the quarter was 3%. Value promotions are key to drive traffic into our stores, which will also impact our margins. Cost of labor was 22.7%, a 0.7% year-over-year decrease. Productivity improvement and temporary relief more than offset the impact of sales leveraging and wage inflation. Within this figure, wage inflation was 3%. This was reduced in many of our markets as government-mandated increases in minimum wage were deferred. An increased proportions of delivery sales contributed to higher labor cost percentages. These factors were mitigated by digital scheduling tools and pocket manager real-time monitoring, which drive improvements in productivity. Lastly, reductions in social insurance payments were roughly $30 million. We negotiated approximately $10 million in rental relief in this quarter We implement cost realignment measures and benefited from reduced social insurance payments. However, due to timing of government incentive receipts, G&A costs increased by 8% year-over-year. Excluding the impact of timing shift of government and other one-time expenses, G&A would have decreased slightly year-over-year. We recorded impairment charges of $24 million. We achieved operating profit of $128 million, bolstered by cost realignment and one-time relief. Looking below the line, our gain from equity investment in Meituan was $45 million, which is before $14 million in U.S. income tax related to gains recognized during the second quarter and prior periods. Our effective tax rate was 25.2%. Net income was $132 million. Diluted EPS was 34 cents, and adjusted diluted EPS was 35 cents. Now, I will turn to our outlook for 2020. The situation is still evolving. However, resilience, adaptability, and innovations are key strengths as we navigate an unprecedented environment. Our outlook is based on certain key realities. One, transportation and tourist volumes continue to be anemic. Two, the delay and shortened school holidays will impact sales momentum. Three, the COVID situation is unpredictable with its lingering effects and regional outbreaks. We expect the recovery to remain nonlinear and uneven. Four, sales deleveraging will continue to pressure margins, especially as one-time government and rental relief are phased out. In response to this reality, we need to be patient and vigilant in rebuilding our sales momentum, focusing on our strength in manual and digital innovation. Successfully leveraging our member base and digital ecosystem to drive frequency and spend will be key. Our promotions are adaptable, and we have seen some successes in building weekend recovery through greater value offerings. Lastly, we are taking decisive actions to realign our cost structure. As we look ahead, we continue to target 800 to 850 new stores for this year. Investment in digital, technology, and supply chain continue. Our 2020 CapEx plan is unchanged in the range of $500 to $550 million. We expect wage inflation to stay at mid-single digits this year, as minimum wage increases have been delayed in many provinces. Finally, while protein supply in China appears to be loosening, our best estimate of 2020 commodity inflation is for low single digits. Risks to a global supply chain remain, which may have potential implications to our domestically sourced products. As previously announced, we will increase our stake in the Suzhou KFC joint venture. The transaction is expected to close in August, subject to satisfaction of closing conditions. We see the new normal of reduced travel, social activities with bouts of disruption as secondary regional outbreaks occur and are contained. The lingering effect of COVID will impact consumer behavior. That being said, with our digital infrastructure, solid execution, and strong balance sheet, we are prepared to capture opportunities for recovery and growth. With that, I will pass you back to Debbie to start the Q&A. Debbie?
Thanks, Andy. We'll now open the call for Q questions. In order to give as many people as possible the chance to ask questions, please limit your question to one at a time. Operator, please start the Q&A.
Thank you. Ladies and gentlemen, again, we will begin that Q&A session. If you did wish to ask a question, again, you can just press *1 on your telephone keypad and just wait for your name to be announced. But your first question comes from Chen Lu from Bank of America. Please ask your question, Chen.
So I noticed that we highlight a few risks and challenges throughout the conference call, and also in the earnings announcement, we also mentioned that these challenges may continue to impact operations in July. Can you actually help to give us a little bit more color on how we compare the July performance with June? Are we seeing any sequential improvement? And just now, Joe, you also mentioned that the summer season is likely to be challenging. And do we have any rough idea as to the trends in Q3 versus Q2? Thank you.
Hi, Chenglu. Let me take this question first, and then maybe Joey can add a little bit more color later. In terms of the sequential improvement in July compared to June, and as we mentioned before, on our prepared remarks, right now there's a couple of happenings that we see, right? So we have seen the transportation hubs as well as the tourist locations, which account for high single digit of our sales mix, being impacted quite significantly, right, by the COVID effect, down 50%, right? So I think unless there's significant changes in the situation, I think that will continue to be a headwind for us. Now we also mentioned that shortened and delayed school holidays, which should have a larger impact on KFC compared to say Pizza Hut. As you know, normally in China, school holiday started in January, it would be in June. This year, because of COVID situation, it has been delayed until mid to late July, depending on where the location, the provinces and whatnot. So I think we will still have some impact on the in July. For the full quarter, we also this year we have a holiday shift for the Mid-Autumn Festival, right, which last year was in September. This year is going to be in October 1st, I think. So there's also a holiday shift impact, right? So that will probably impact couple points, if you look at that kind of shift. So those will remain, some of this. And then of course, in June we have this mini outbreak in Beijing that also impacted sales in not just in Beijing but the surrounding provinces. So the situation has improved quite significantly in Beijing. However, we do see other regional outbreaks, for example, in Liaoning, right, Dalian, and also in Xinjiang. So we do expect that kind of potential regional outbreak to persist until either the COVID-19 have a vaccine or effective treatment. I think we will still continue to see potentially mini outbreak in regional impact. Obviously, this summer we got a lot of rain here in China eastern part. Along the entire Yangtze River, I think a lot of provinces have flooding, and the flooding is quite severe compared to the past few years. So we do expect that would have some impact on our eastern part of operation, which is our strong base. So in Wadong district, right? So I think we still see pretty strong headwinds, some of these difficulties, in the third quarter. Now, however, as we mentioned, we have a very strong digital platform, and we have very strong execution, including our logistic operation, which continue to work well, even in the midst of the flooding situations in some of the regions. So we would make our efforts to to obviously to drive sales recovery, and then also continue to be vigilant on our cost front as well. So we have make some cost alignment, as we have mentioned on our prepared remark and also our earnings release. That is showing up quite well. So if you look at our labor productivities for the quarter, it have improved. If you look at our G&A, right, so excluding all those one times and timing issues, we actually see G&A decline year-over-year, which is quite significant given the fact that we normally would have merit increase, wage increase, and new hire. So that's my comment. Hopefully we address your questions.
Thank you, Andy. I guess, Lawson, in the last earnings release, we mentioned the challenge in transportation hub and tourist location and the summer holiday delayed and shortened. And the delay shortened 2 weeks in June, 2 weeks in July. And for this earnings release, Andy just also mentioned the regional resurgence of the COVID-19 and the not so little flooding challenges in different parts of China. So I think we are ready for next question. Thank you.
Thank you.
Certainly. Your next question comes from Lillian Lu from Morgan Stanley. Please ask your question.
Thank you. I have a follow-up question on the same-store sales growth. Obviously, I think Pizza Hut did very well, actually better than thought in second quarter. I think Joey also mentioned in the opening remark that KFC was more affected. Just wanted to understand a little bit more in detail in terms of the impact to these two major banners' recovery pace, why it's a little bit different right now under the headwinds. And related to that is more the outlook. How are we going to picture KFC and the Pizza Hut same-store sales growth recovery pace in second quarter or the fourth quarter? Thank you.
Thank you, Lillian. For KFC and Pizza Hut, as I mentioned it in my presentation earlier, I'm proud of both of the progress. Q2 has been difficult, but both brands did well in their own different way. And let me, make a few comments one at a time. KFC reached to 89% same-store sales within quarter one, which is very, very quick. Supported by a few weeks of strong sales before Chinese New Year, and also very few trust restaurants opened during the pandemic time. So KFC rebounded very, very quickly. And Pizza Hut, because of the closure of dining business in many of our stores during Q1, so sales was more impacted. Now, once the dining business was allowed during Q2, the dining business for Pizza Hut bounced back quite quickly. As I can share with you that the Pizza Hut dining business recovered from 40% to 55% during the Q2, so that helps. In terms of the recovery path and outlook, for both brands, that really come down to the theme that we talk about, the resilience, adaptability, and innovations. And to be specific, I'm going to talk about short-term and long-term. So for the short-term initiative, which is something that we have been doing from the very beginning of Q1 and then throughout Q2, is value. A lot of value promotions because we see that as a challenge and also opportunity. And as I mentioned in the last earnings release, the weekend was challenged, and thus in the Q2 time, we have shifted our promotion towards more weekend and holiday, and we are seeing the results. And then second short-term initiative, which is something that we have been doing quite well, is menu and innovations. I'm talking about the product innovations. So for KFC, we have the exciting 粽子, the 端午节 Dragon Boat Festival 粽子, and we have the 豆花, which is a very, very popular item. And then for Pizza Hut, we have something exciting, the roast stick rice and crayfish pasta. And for people in Wuhan, we even launched 热干面 with crayfish, with pasta. It was sold out very well in Wuhan. So these are the short-term initiatives that we've been pushing. And then on top of that, we are also taking this year as a challenge, but also opportunity to work on our short-term and long-term business model transformation/innovations here. Let me give you some example. So for KFC, we have been working very hard to extend our business to B2B2C, which is the corporation delivery members. We have been preparing for it, and the COVID-19 gave us perfect opportunity to give a push. So by now, we have signed up more than 10,000 companies in our corporate delivery membership. And you can see the impact of our number in TA increase in both Q1 and Q2. In quarter one, KFC TA increase is 27%. For Q2, it's 12%. So it's not only driven by delivery, it's also driven by corporate delivery. Very big order. Not to mention, it gave us another source of traffic, 私域流量, on top of our own app. So that is a short-term and long-term. And then, of course, the contactless delivery that is very popular throughout the world right now. For Pizza Hut, our hard work in many fundamental capabilities come through. So we've been working very hard on digital upgrade. And guess what? We get our mobile ordering before Chinese New Year. We did not know the COVID-19 was coming. And then COVID-19 came. It became a very good platform for takeaway and mobile order. So our mobile order or digital order just increased significantly. And Pizza Hut alone, the digital order for Q2 is 61%. And that compared to last year's 29%, it almost doubled. So again, the business model transformed. And for Pizza Hut, when we add the takeaway business, which is very, very driven, it's very much incremental because it's for one person, together with delivery, the non-dine business become more than 40% of our business. So we become less reliant on dine business. So that is an example of both short-term and long-term transformation. And then I would like to mention the members. We have reached 268 million members, and the members are our digital asset to allow us cross-sell between the brands and between the business within the brands to increase frequency and cross-sell. As I mentioned in my presentation earlier, we saw the doubling of average revenue per active user, and that's very exciting in the past years and for the coming few years. And last but not least, as Andy mentioned earlier, we are accelerating our digitization to help cause realignment as well. And all these are very long-term, but also short-term. Last but not least is our new builds and store refresh. So not only we are recovering sales, we are innovating our business model. We are building our long-term prospect in China, because despite the short-term challenges here, we are committed to China and we are very excited about the future development opportunity here. Thank you, Lillian.
Thanks a lot, Joey.
Okay, we have our next question from Michelle Cheng from Goldman Sachs. Please ask your question, Michelle.
Hi, Joey, Andy. A question about Pizza Hut. The second quarter improvement is quite encouraging. As you mentioned, we are pushing this takeaway, one person, same menu, etc. So can you share with us what are we going to focus in second half? And given these kind of sales mix change, so are we going to see some downsizing of the store or some new store format going forward? Thank you.
Thank you, Michelle. For the revitalization of Pizza Hut, I stay away from the turnaround because Pizza Hut was never so bad to that need a turnaround. It has always been a very profitable business. But for the revitalization of Pizza Hut, we always have a very clear step-by-step progress. And good things do take time. In the last few years, it took us 18 months to turn the same-store sales from negative to positive, which is not slow. But let's look at what are the key things that we have done in the last few years. One is about the value for money and the quality of the product. So by last year, we managed to upgrade more than 70% of the menu. And by this year, when we launched the 30-year platinum menu, we further upgrade the menu. So that is in really good progress, and the momentum will continue because Chinese customers does want and require good food with great value for money. So, and then what are the other things that we have done? We have taken our time to rebuild our delivery infrastructure. So that's the hardware for 2018. We took the delivery rider back to our system. We rebuilt it to improve the quality of delivery. Without the quality of delivery, without ensuring pizza will reach our customer nice and warm, it's very hard to grow the sales. So we did the hard work, and you can see the impact of the delivery business growth in 2019. Now, in the last 2-3 years, we also take the chance to rebuild the digital infrastructure, anywhere from member sales to mobile to digital ordering, you name it. And right now, the digitalization. So now we have seen the increase of the pre-order, digital order, that all help save our labor costs, but also the business on to build a business on takeaway. That comes through, but it does take time. With these infrastructure in place, not to mention we have also upgrade our team. There are a lot of people movement here in the brand in the last few years, and I'm quite happy with the team right now. I think we have a fantastic team who are focused, who are innovative, who work hard, who can execute well. And what else are we doing to build the business in the short and long term? As you mentioned, Michelle, the new build and store refresh. Like we have focused on store refresh in the last 2 quarters instead of building new store. Actually, if we look at the last 3 years, we have been very conservative with building the new store until we get to the right business model. However, we have not been slow to upgrade our stores. Since 2017, we have refreshed about half of the entire Pizza Hut store portfolio. In the process, as you can imagine, we reduced the store size, we upgrade the store look and feel, we improve the efficiency, and we'll continue that. We'll continue to take aggressive pace to refresh our store. At the same time, when we are rebuilding the new store, you will be able to see the total portfolio probably won't move that much, but the content, the component within the portfolio will change from sort of bigger store to sort of smaller store, because even for the new store that we rebuilt in the last 2 quarters, the majority of them are much smaller store, which is the satellite store that I introduced to our investor back to last year Investor Day. Much smaller, much better return of investment, much more suitable to increase the density of the store to improve the quality of delivery. So these are the few things that we are working on. And last but not least, the cost realignment. This is not short term. I mean, anyone can do the short term cost cut, but what we are looking for is long term cost realignment, so that we are learning enough from this challenge and also taking advantage of the open mind situation or open mind opportunity for our staff during this difficult time to really rethink about our cost structure so that we can benefit from the realignment cost structure in the very long term. Thank you, Michelle.
Thank you, Joey.
Your next question comes from the line of Kevin Yin from JP Morgan. Please ask your question, Kevin.
Thank you, Joey and Andy. I have 2 questions. The first one for a technical question for Andy. Can you help us to understand why the operating leverage impact on Pizza Hut is not that bad as a KFC? Because if you look at the first quarter, second quarter, their margin, restaurant margin is pretty stable versus KFC's continue declining. So this is a technical one. Second one, I'd like to know more on the impact from the flood. Can you give some vivid example or vivid case that like in some region, province, how badly the store sales are a negative impact? I mean, in some specific region which we had some very bad flood, and how bad is the store sales decline? Thank you.
Thank you, Kevin. So let me take your first questions, regarding, obviously the impact, on KFC and Pizza Hut and how they're different. So I think there's a couple of questions about, the performance of the 2 brands. I think, as we might have mentioned on the call, the SSG, which is same store growth, was 10%. Declines in KFC and about 12% in pizza. And which is a quite improvement, right? So in the for KFC cases, improved by 1%, and then more pronounced improvement at Pizza Hut, which in the last quarter was down about 31%, right? So that's quite a lot improvement there. But that still masks the actual improvement, right? So if you look at both brands, because the SSG calculation actually exclude temporary store closure, right? And so if you take out, if you look at the store reopening in the second quarter, the system sales recovery actually improved quite a bit at both brands, and on a year-over-year basis, improved from -20% in Q1 to about 7% in Q2. So that's important. And obviously, we also see, April and May improvement, sequential improvement in both, SSG and also overall system sales improvement. As we mentioned, we did get impacted, by some events in June and early part of July. One is that there's regional outbreak in northern China, and then there's a delayed summer holiday, and then of course, as you mentioned, there's flooding in June and July in part of a large part of China. So I think that's very significant. And as you mentioned, obviously KFC have a very strong recovery right after the peak of the outbreak. Pizza Hut in the first quarter more impacted and therefore see a relatively better recovery. But both brands actually have recovered quite well in terms of operations. In terms of the margins as well, so I think if you look at the margin at both brands, it has improved. And I think this is hopefully will continue to be the case. As sales leveraging beginning to ease as we move forward in the coming quarter. But obviously, KFC have been very profitable before, right? The UC margin was about 17, almost 18%, and then the sales leveraging would impact a little bit more on that. Particularly, the reason is because if you look at transportation hub, which is not only account for the high single digit of our sales, but also account for low double digit of our profitability. And that impacting that sales trend over in transportation hub and tourist location would have a disproportionate impact on KFC compared to Pizza Hut. But I think if you look at both brands, labor productivity, cost control will help us to see sequential margin improvement.
Thank you, Andy. Let me make a comment about the flooding. This year we do have a lot of water. I mean, the water volume is comparable to 1998, but the impact is nothing like 1998. Let me give you a big picture, and then I'll go through why. The big picture is lower tier cities sales actually recover better than that of the top tier cities, and that include the regions that were more impacted by flooding. That's namely like Jiangxi and Huadong area, but mainly in the lower tier cities. So why the sales in lower tier cities still hold up slightly better despite the flooding? Because there are 5 reasons. One is a lot of these lower tier cities, that means we only have some pocket of store being impacted, not huge scale. So when some stores are impacted, that is not at the scale of tier 1 cities, so we can handle that kind of challenge. But also due to the second reason is our store tend to recover much faster than our competitors. So one example is that one little time, the gas got turned off by the city government the entire time. But actually that means more business to our store because our store use electricity, not gas. So when our customer could not have hot food at home, they come to KFC, they could have hot food there. Not to mention, we always have free charger for your phone and then free clean water if needed. Third reason is the lack of transportation and tourist
hubs in the small town city, in the small town, the transportation hub and the tourist hub, as Andy mentioned, is almost add together high single digit, almost double digit of our sales, and when it's severely impacted, it does impact our overall number. But the small town, usually the stores are less impacted by that. And fourth reason is we are one of the few trust brands in the lower tier cities. So during the difficult time, we actually benefit from it. Last but not least, delivery growth actually is even higher in the lower tier cities than top tier city. So I hope that gives you a better color of the dynamic of the low tier cities despite the flooding challenges. Thank you, Kevin.
Thank you.
Your next question comes from Anne Ling from Jefferies. Please ask your question, Anne.
Hey, hello, management team. Thank you very much for taking my call, my questions. And so I have a question regarding the some of this one-off benefit. Andy, you mentioned about the 30 million in second quarter on the social insurance payment, and also 10 million rental relief. If we look at yesterday, Starbucks results. They also mentioned about some VAT exemption, which we saw the announcement back in February that all the catering business and lodging business will have this tax reduction. That helped their same-store sales as well as their profitability. I just wonder whether for this quarter are you enjoying any sort of this kind of VAT exemption benefit, and since this benefit will last till December, may I know how soon we will be able to get this kind of benefit? What are the procedures on this part, and is there any additional one-time benefit in this quarter and in the foreseeable future? Thank you.
Hi, and I will answer your question about it. Hi, can you hear us?
Yes.
Okay. So thank you for the questions. VAT and its impact is a little bit more complicated. There's obviously, we're aware and have looked into, the VAT reductions, temporary suspension of that by the government, at the beginning of the year. Generally, VAT that, we collect from our sales is generally less than our VAT credit for our company services for the input cost. So there's offsetting factors, right? So you have these sales to consumer, and we have also used product and services, and that's offsetting. So after very careful analysis that we have done, we don't see there's meaningful impact on our top line or bottom line from the VAT exemption that the government have launched this year. Obviously, we'll continue to look into it because tax itself is a very complex issue. But in regard to VAT, we would have very limited impact on our sales or our profitability. In terms of other one-times, so we obviously received the social insurance payment reductions in both the first quarter and the second quarter. But as you know, that was because the government launched that in February and then have extended that to June. Unless some new update that may go away in the third quarter. So unless the government extends the program again, we may see that one-time relief to go away. The other one is that rental relief. We received that in the first quarter after negotiation with the landlord. The amount is less in the second quarter compared to the first quarter. We do expect that as the recovery continue, that would also be phased out. So I think some of these one-time impact may be lessened in the third quarter, and then potentially also in the fourth quarter.
Okay. And Andy, when will we know that the government might extend the social insurance payment exemption?
Yeah, when they announce it, then we'll know.
There's no timeline on that part.
No, I think it's government policy, so it's really up to the government to announce the program. Yeah.
Okay, got it. Thanks.
Your next question comes from the line of Christine Peng from UBS. Please ask your question, Christine.
Thank you, Andy. So I just have a question regarding the cost alignment you mentioned earlier in your presentation. So can you elaborate as regards to number one, what measures you have been taken to do this cost alignment, and secondly, what's going to be the margin implication, for example, in 2021 once the revenue normalize, to the pre-COVID-19 level, especially for Pizza Hut. Thank you.
Okay, Christine, thank you for your question. Yeah, so obviously, as we look into the cost structure and we align that, there's two sort of drive and goal for us. One, obviously, is to continue to make our cost structure more flexible to handle contingency such as we have seen in COVID-19. The other part is that we'll continue to try to drive our overall cost structure more efficiently, so that as Joey mentioned, taking advantage of the current situation where folks are more aware of the need for better cost control and better cost of realignment to push through some of the initiatives that would help us to make our cost strategy, cost structure a competitive advantage for us in the longer term. So with that in mind, so we go through sort of each major category of our cost components. Now, so if you look at our for example, COS, is obviously almost all variable, but we're also focusing on using technologies, using product innovations, to sort of improve wastage, in the restaurant level, to manage inventory turn better, so that can handle fluctuations, in demand shift, for example. In labor, for example, as we mentioned before, over time we have shift some of the labor components into more variable portions, with more flexible crew scheduling, etc. Again, give us some resiliency in terms of handling the flux in sales changes. And then also, if you look at obviously we benefit from social benefit, but in the longer term, it's the labor productivity improvement that we use, technology to drive that will really help us in the long run to maintain that, labor productivity improvement that we have seen over the past 2 quarters, right? So we'll continue to focus on that, invest in technology, digital technologies, both, in the storefront as well as, in the back of the kitchens as well as our offices to make sure that labor productivity to continue to improve. Now, if we turn to, for example, occupancy and other expenses, we have variable components a part of that, royalty fees, advertising, marketing. That's somewhat tied to sales. But if you look at over the past few years, for example, we have reduced the upfront investment cost for our store opening. That have a beneficial impact, which is per store basis, depreciation have decreased, even though it's fixed, okay, per store basis. If you look at rent, for example, we have 80% of our lease have a variable components to it. If you look at the rental cost, only 60% of that is fixed. So we have built in some flexibility in our rental expenditure. Obviously, we're working very hard to negotiate better lease and better contract whenever possible, given their current situations. Now, if you look at G&A, as we mentioned, we have done a very large initiative looking into G&A, and that have been ongoing for the last couple of years now. We will continue to see our effort there. So if we call it, for example, as you mentioned, you look excluding some one-time and timing shift, you actually see G&A expenses declining year-over-year. So that will continue to be our focus, which is basically we align the overall cost structure, make us more flexible, more competitive in the long run.
Thank you, Andy.
Thanks.
Thank you, Andy. Can I just ask
Sure.
Sorry, Sorry, we have one last question from Xiaopo Wei from Citigroup. Please ask your question, Xiaopo.
Hi, thank you for taking my question. I have a very quick question on Pizza Hut. If you look at the Pizza Hut recovery, actually not only the top line but also the profit improved a lot Q on Q. You mentioned a lot of factors. I think it will be short term, but let's recall what Julie have been talking about, the revitalization effort of Pizza Hut the past 2 years. Shall we say that the behavior changes of consumer post-COVID may actually put Pizza Hut in a better position of revitalization post the COVID outbreak? Because we're seeing other casual dining players actually recover much slower than Pizza Hut, in my observation. Could Julie give us any color on that?
Hi, Xiaopo. Thank you. Well, we are certainly grateful to see the recovery in both top line and bottom line. As I mentioned, the dine-in recovery as well. And the bottom line recovery, of course, to a great extent is because of the sales leverage. Our sales is back, so the bottom line definitely look better. But with that said, there are certainly few things that happen here to help us recover better. I don't know whether I would say COVID-19, give us opportunity, or we just have been prepared in the last few years, and it just happened. The timing is not too bad for us. The innovation capability, the food improvement certainly help a lot because our team right now is so innovative, and it's something that I mentioned in the last earnings release. We are able to use whatever ingredient in our store to come up with very cost-effective and efficient food for the takeaway business. One example is the 焗饭, the baked rice, which we use actually our pizza oven to cook. Just go through like a 流水线, like use the pizza oven, go through a very efficient and efficient in terms of cost structure as well, and it worked very well for the takeaway for the one set meal, and thus therefore it works. And that is not because COVID gave us the opportunity, because we've been working on the innovation capability. And then the second is the delivery. We have our own delivery rider when we really need it. As you can imagine, if we did not have our delivery rider, even if the business is there, whether you have or you don't have the delivery rider, decide whether you have or don't have the sales. As simple as that. Because everyone will be fighting for the delivery rider at certain times, such as COVID-19 or big rain or snow, whatever, etc. And then the third is the digital effort. The digital capability infrastructure of Pizza Hut is slightly behind KFC because the KFC revitalization happened much faster. It happened as early as 2015, and then Pizza Hut started a bit later, so the infrastructure follows. But once we get the infrastructure ready, the pre-order, the mobile ordering, the digital payment, etc., it just worked. Our takeaway business just happened, and thus it was like less than 5% of our business last year. Now it's double digit of our business, and it's quite substantial. Not to mention, last but not least, our long-term, very strategic focus membership. Pizza Hut itself has over 80 million members now, and the sales per member is more than 50%, and that's big number. Just imagine 50% of our sales, we can reach out to the customer directly at very low cost, efficiently, and that help us drive the business. Last but not least, our store environment is much better because of the hardware in the last few years. So when the store environment look much nicer, when the food is good and the price is good, it allow us to do some very effective promotion like 自助餐, all you can eat for steak and crayfish. And steak and crayfish, we can put it in the all you can eat menu because our supply chain is very efficient. So it all just all the hard work come together, particularly during this difficult time, to allow us to recover probably slightly better than the other casual dining restaurants. Last but not least is Pizza Hut does not have high proportion of sales from transportation and tourist sites. And that is quite almost mid-single digit sales impact in same-store sales for KFC. Pizza Hut, we don't have the challenge in this particular time. So you can see why it add up help Pizza Hut revitalization even during this difficult time. And we certainly are hopeful, and right now we have the right team, right asset, right product, right price. We are hopeful for the ongoing revitalization of Pizza Hut business as well. Thank you so much, Xiaopo.
Thank you, Joe. Stay healthy, please.
Thank you. You too.
Okay, there are no further questions at this time. I'll now hand the conference back to your presenters for any closing remarks.
Thank you for joining the call today. We look forward to speaking with you on the next earnings call, and that concludes today's call. Have a great day. Thank you.
Thank you, everyone.
Thank you. Thank you.
Okay. Yes, ladies and gentlemen, that will conclude today's conference call. Again, thank you all for participating. You may now all disconnect.